First slide, as it says, uh, corrections don't last, but conviction lasts. As the heading is very, very appropriate in the current scenario, where the corrections we have seen. I am now 22 years in the market. I have seen markets correcting many, many times. I have seen one of the best bank in the country correcting 80% 2 or 3 times in my lifetime and bouncing back and giving phenomenal returns. So that's the reason of selecting this, that corrections will not last for longer. They are temporary in nature, while conviction on on the fundamentals is permanent. So with that, I will move on to next slide, and I will be very happy wherever you have any doubts to please raise your hand and we can answer that. So this is a brief about how we run our philosophy around investment. So we will talk about it more detailed in at later stage, but broadly, when we look at business fundamentally, we put lot of focus on the scale, how much scalability is there in the business, what kind of returns the business can give, how much technology is involved in the business, because that is the moat for any business, and a very, very high weight, 60 to 70% weight we assign to leadership, because we have seen one of the very reputed family in the country where there were two sons. One son is the richest person today in the country, and the another son, despite getting best businesses in his share, has ruined the company. So, leadership is very important. A bad management can tide over bad situations and bad industry cycle uh, in a different way than a good management, which can do much better even in bad cycle. So we should always have good management, because good management will do the right things even in difficult times. And finally, governance. That is, the management must have understanding that it has a fiduciary responsibility of protecting the minority interest, and it should never indulge in anything which directly, indirectly, or remotely takes away any rights of the minority. Because we, as a shareholder of a listed company, will always be in minority. There are very rare chances, except for like banks like ICICI or Larsen, where sometimes investors could be majority, but generally we are always minority. So what is the attitude of the management in towards minority is very, very important for us. This is small achievement, although very early to call out. We have been rated as most promising PMS in 2024, just few months after our operation. And again on 31st January, both our schemes reflected in top 10 PMS. And remember that there are 3,000 plus schemes in PMS Bazaar. And obviously it involves AIF, PMS, and many other products. But we still were able to find our name, both our schemes, as on 31st January. So to start with, how has markets seen sharp correction? What has driven your sharp correction? So as you can see, calendar year 25, this is prepared as on 28th of Feb. So we have seen 6-7% correction in the Sensex, and 15-16% correction in the mid cap 100 index, and a slightly more than that in the BSE 400 mid cap small cap index, and a slightly more around 22-23% in BSE small cap 100 index. Although as on 10th of March, on 5th of March or 6th of March, the number will be even little more pronounced towards negative returns. What has brought things down? One is obviously reality. So reality stocks have taken a big hit. One of the primary reasons, as you all know, that there is a lot of debt. It is a leveraged business. Sometimes they also have foreign currency debts, and when currency depreciates, there is a lot of pressure either because of the foreign currency debt or because of the fear that interest rate cuts will not happen. Then cap goods, similar to real estate, it is a proxy to real estate and economy. Then consumer discretionary, healthcare, IT, oil and gas, and you can see the least impacted was metals, primarily because metal again started seeing an upcycle. It has already seen the worst few months back. So that is how markets have been impacted. Global markets also, you can see we are the worst performing market within the global markets. And surprisingly, Hang Seng and China was one of the best performing markets. So we have massively underperformed all the markets globally in last few months. And I will come to the reason why it has happened so, and why it throws us a very good opportunity for future. And one of the reasons to start with that, India has significantly outperformed all the emerging markets for a period of time, right from June 2021 to December 2024, we have seen a massive outperformance of Indian equity market versus the global emerging market basket. And within that outperformance also, if you see the outperformance in small and mid cap was even more sharper. So we have massively outperformed. But with the current correction, what we are seeing that the gap is coming down, and the gap between MSCI emerging market earnings growth and the Nifty earnings growth is closing. And this gap was very wide earlier, while Nifty earnings growth was at a higher level and not falling much. But the mid cap and small cap index earnings were lower, although they were going up. Now both of that have converged, as we can see in the diagram. And this has coupled with relentless FI selling also. And I will come to the reason why FI has been selling so intensely. And now I see those reasons reversing. So I will explain you this part. And I'm keeping a record of whatever I have to explain you in detail. But I want to run you through all the slides so that I can tell you a small summary of why things are happening, how they are linked. So you will be able to understand the story well. And this is a slide which showcases the government spending, the slowdown in government spending, which has happened. And this is also one of the reasons why you have seen correction in government related sectors like power finance companies, the PSU banks, and the defense stocks and all. And domestic liquidity has also turned into deficit, which is also one of the reasons. And we will tell you why that has also happened, how that is now behaving. And further, it was impacted because of the sharp appreciation in the US dollar. And then Mr. Trump comes, the most unpredictable head of one of the biggest economy in the world. And he came with a view that everyone is wrong and I am right, and he started shooting arrows on everyone, and that is what is reflecting. So he has tried to do something on the tariff side, and I will explain you why tariffs are not a very good idea for anyone. So how have markets reacted in the next 1 year post correction? This is a very good data, and this should give you some confidence that we have seen such cycles in the past many times. The most recent ones to everyone's mind is the COVID cycle, where the markets were down 37.5%, and in the next 12 months itself they went up by 88%. So the idea to show you this, that it is not sporadic, it is always consistent, that markets do recover very sharply after time correction. What are the potential factors to help market? So this is something which you all saw in the budget. Government did not take baby steps of increasing the exemption limit by 50,000 or 100,000 rupees. They directly increased it by 4 lakh rupees almost in one go, which leaves a lot of liquidity in the lower middle class group and the middle class group. And then we also are embarking on a rate cut cycle, which is also dependent on how the currency behaves. And RBI has taken some measures to improve liquidity and inject liquidity, and it is still ongoing process. We saw something happening 2 days back also, when they infused 2 lakh crore of indirect liquidity. And we have strong corporate balance sheet. Now this is also an area of problem. While the balance sheets have become very strong, but there is a lot of reluctance to spend and to do capex, and I will come to this point in a greater detail little later. This is the equity savings cult. India in footsteps of US, where US was in 1980, and I am very confident of this data because as the awareness of equities keep going up, and as our current country's fiscal deficit and current trade deficit starts moving down, currency starts stabilizing, I think the returns on fixed deposit and other instruments which have high safety quotient will start going down. And when that start going down, the hunger for more and more riskier assets in the investor will go up. And that will be another reason why equity penetration will keep going up. And we are at a very, very low level. We are at least 40-45 years behind the developed markets. And this is another data which showcases why we are bullish. And this showcases how it has happened in how the AUMs have shifted in US. And in India also, the saving cult, which is visible, that reflects that we will also see a huge amount of AUM growth. And we are already seeing it continuously, although on a low base. we do have our challenges, and we do have difficult borders. We do have a volatile currency. We do have, dependency on crude. So all those things are always there. So our market is not a very easy market to invest, and that is also a reason the returns are high. So it has to be played very tactfully, unlike developed markets where the returns are also fixed and the risks are also very limited. And these are beautiful reforms which the government has taken. The direct benefit transfer, which has improved the flow of money in the economy, and more efficient savings, more efficient spending, much better tax structure. Government did rationalization of tax couple of years back for the corporates, and now this time they are given a big relief to the lower class and the lower middle class. And also there are some reforms which have come in the real estate and the substantial investment which government has done in the digital infrastructure. A classic example of which you would have seen in Kumbh, how people have in 45 days there is a 3 lakh crore of economic impact which most of the ministers and which most of the politicians talking about, and we have seen some evidence of it. And this is how government has invested in some of the reforms like GST and direct benefit transfer, and the impact of that. GS has brought substantial efficiency. And next is the reforms in the corporate sector, jump in formalization. That is because of demon and other, the cash economy has taken a little bit of hit and moved towards the organized. We also have seen substantial reforms on empowering of the masses, unprecedented adoption of digital infrastructure, and also power deficit has substantially gone down. We have seen that, the investment of the government in renewable has done a